Everybody swears up and down they're gonna buy the dip until it's time to buy the dip when the dip happens. Right now, Bitcoin is trading at like 59,000, 60,000, whatever, is fluctuating from those different price points. You should look at this as a gift to accumulate Bitcoin at a lower price. Literally nothing has changed about the protocol. Nothing has changed about the network. Blocks are still being mined every 10 minutes and nodes are running across the entire globe. Miners are still mining transactions and the network is functioning as it's supposed to and as it's designed. This is just an opportunity for you as an individual that may want to be sovereign to accumulate Bitcoin at a lower price point. Same conversation as gold. Gold is trading at about $3,000, 992. Did anything change about gold fundamentally? No. It still takes time and energy to mine gold. It still takes time and energy to go find gold. And as a result, it can't be printed. So just because the dollar denominated price of Bitcoin and or gold is fluctuating doesn't mean that there's anything fundamentally wrong with the money. The currency, like the dollar, fluctuates all the time. I could show you a chart showing how dollars buy you less over time, euros buy you less over time, yen buy you less over time. It doesn't matter what it is. Currencies are printed into oblivion. This is why I always say the denominator matters. The denominator of gold that exists and the denominator of Bitcoin especially can't be manipulated. As a result, it takes real time and energy to mine for hard money. What I want to break down to you in this video as well is the idea around the Aldrich plan. Specifically, what happened in 1913 during the creation of the Federal Reserve on Jekyll Island. What this ended up promoting and propelling forward is a process and a financial system that was already implemented throughout Europe through the Bank of England, but the same thing was implemented here in the United States on behalf of the Fed. The canceling effect, who gets paid first? So essentially, when new money, it doesn't enter the economy evenly. The elite, the central bankers, they print money, they hand it to commercial banks and governments first. They spend this new money before prices rise, and then they can buy real cheap assets on sale, especially assets that you can't buy. Those closest to the printer end up benefiting the most. This is why when the recession happened in 2008, the dot-com, COVID, all these low interest rate environments led to more capital being infused into the market. And as a result, those that could borrow cheap because they have all the assets, they could go buy up more assets at your expense, and they inflate the cost of everything else around you because there's more dollars circulating in the economy, but there are the same amount of goods. That's what's happening. Your dollars are buying you less. Then next, you have the dilution trap. This is the invisible tax. The flow. By the time new money reaches common workers, prices have already spiked. The reality is that your wages buy less, and while the assets owned by the wealthy, they skyrocket in value. The result leads to inflation. This is a hidden tax, and this transfers purchasing power from savers to the state. The forced risk engine. The old way, hard money, whether it was gold back in the day, and I believe Bitcoin is hard money. It allows normal families to save for generations, right? The new way, debase regular people, and they become speculators. They start buying crypto meme coins. They speculate and buy real estate, not even knowing like if an area is going to be a good area to buy real estate. They buy stocks and all sorts of stuff. When at the end of the day, you want hard assets that can't be printed or debased. This is the book that everybody should be reading, mandatory reading, and it references a lot of what I'm describing right now in this video around the Nelson Aldrich plan, which essentially led to the creation of the Federal Reserve on Jekyll Island. You need to read this book. If you don't read this book or you haven't read this book before, you can't even speak in an educated manner about what I'm trying to describe to you. This is bigger than, oh, well, Bitcoin's price is up or Bitcoin is down, this, that, and the third. No, this is actually an explanation of how a fiat currency system works when central banks and central authorities are in control. If you don't understand this, you'll fall for the same tricks over and over again. Your goal and objective should be to accumulate hard assets that can't be debased. And as a result, I'll leave you with this quote from Frederick Douglass. Knowledge makes a man unfit to be a slave. Let that sink in. If you don't want to seek knowledge and understand what's going on, you will fall for the same tricks over and over and over again. It's on you. It's on you to protect your family. It's on you to protect yourself. Nobody's going to teach you this in school. Nobody's going to teach you this at your job. Like, nobody. You have to go and read and understand this. And once you understand what happened centuries, like every civilization, this is the same play. Somebody controls the centrally controlled fiat currency. They tell you that there's value to it. You essentially speculate. You buy up all these other things while those at the top are laughing as the power and the money is inflating up all of their assets because more dollars are being printed and infused into the economy. Hard money is the life, Rav. Whether it's Bitcoin, gold, the physical gold, metal, like silver, etc. Hard money is the life, Rav. The denominator matters.